Good afternoon. Welcome guests and panelists to Economic Matters. Today is Tuesday, February 3rd. We will start our official first public bill hearing on Economic Matters. For those of you who may be new to this committee, since we now cover a certain jurisdiction that we never did before, I'm the new incoming chair, Chris Valderrama, my vice chair, Lori Charkoudian, and we have two new members to our committee, Delegate Harry Bandari, Delegate Denise Roberts. So for all of you who may be new, welcome. Just a few housekeeping points. Thank you to all of you who are coming before us to testify. I know you come out of your busy schedules to present to us. Please know that we are listening. Also know, I will preface by saying, as a chair, I am one who cannot sit for long periods of time. It's unhealthy, for one. So if I rise, I'm still listening. I just want to put that out there for your knowledge. Also, with that said, for those of you who will be testifying, you will be allotted 2 minutes. We kindly request that if you are going over your 2 minutes and you hear the timer go off, please kindly wrap it up. We will read written testimony that is provided. Also, with that said, the legislators who are coming before us to present, they are not timed. So if there are too many people who are testifying who can't get here in time for whatever reason or what have you, your legislator, your sponsored legislator could present for you as well. If there's anything I didn't cover and it comes to mind, I will be sure to bring it up. But with that said, welcome to Economic Matters. We will start off. We have 7 bills on our docket. 1 has been withdrawn. That is House Bill 61. Delegate Lopez, she has withdrawn that bill. So we'll move on to the next bill, which is House Bill 308, and we have Delegates Chi and Hill presenting. You can bring your panel, Delegate Chi.
Now, the first one to present the bill hearing at this newly formed ECM. Good afternoon, Madam Chair and Madam Vice Chair, distinguished ECM members. For the record, I'm Delegate Lily Chi, here to present HB 308. HB 308 allows Maryland businesses to use a certified mail receiving agency as their official business address on file with the State Department of Assessment and Taxation. That's it. That's all it does. It's very simple. So what is a certified mail receiving agency? It is a private business, such as Mailbox, etc., UPS, LegalZoom, certified by the U.S. Postal Service that rents private mailboxes to its customers, oftentimes small businesses. Business mail can be sent to this physical address and then digitally scanned and uploaded to a virtual mailbox that the business owner can access at any time. It's a simple service that many of us actually use. Different services may be offered depending on the nature of that particular certified agency. So why do we need a bill? Because times have changed. Businesses now look different from what it did in the past, especially after the pandemic. A lot of them do business online primarily. It's not always necessary nor affordable for businesses to rent a physical location. But ESTET continues to require businesses in Maryland to have a physical location to register to do business in Maryland. In fact, in the past, businesses were allowed to use a certified mail receiving agency as their business address, but it was changed for some reason we still don't know in 2025 that affected over 1,000 businesses. So we are asking to repeal that. Other key points to consider about this. Most states across the country, except for maybe couple others, as I know, allow the certified mail receiving agencies to be used as a physical address for business registration. And also, if you're concerned about consumer protection or whether they are safe, et cetera. In order to become an CMRA, which is Certified Mail Receiving Agency, the business must be certified by and registered with the U.S. Postal Service, which regulates and has oversight over these CMRAs, and they are quarterly evaluated to make sure that these are legit agencies to act as go-betweens. And in case the government needs to actually make sure that the business registered actually has a real person behind it or real physical address, which oftentimes is a home address, then the certified mail receiving agency is required by this bill to actually provide that address if necessary. But in most cases, businesses can just do business without having to reveal their personal address with this bill, which is a very business-friendly bill to remove a barrier, which is why it has been supported by chambers of commerce. If you have any questions, I would welcome that after I yield to Doug Stan, who is here representing the LegalZoom.
Thank you, Madam Chair and members. Good afternoon. My name is Doug Stang, Head of Government Affairs for LegalZoom. Appreciate the opportunity to testify in support of HB 308. LegalZoom is an online legal service company that assists entrepreneurs with forming and running their businesses. Last spring, we were notified by the Department of Taxation and Assessment that they adopted a new interpretation of existing law prohibiting the use of a P.O. box as a business address, which now would cover the use of commercial mail receiving agencies, or CMRA, addresses similarly at the time of formation. CMRA addresses are significantly different from P.O. boxes and provide important solutions for small business. They function as a principal place of business. In addition to receiving mail, CMRAs like LegalZoom also operate as a back office for their customers, providing services such as depositing checks on the customer's behalf, providing a safe place to physically store important documents, and allowing business owners to maintain and organize digital records. CMRA addresses provide increased reassurances that the person behind the business is legitimate and traceable. They're regulated by the USPS, and to get this address, individuals must undergo a rigorous ID verification process, including providing a valid photo ID and proof of residency. CMRAs submit this documentation to the USPS's central database and certify on a quarterly basis that the records are up to date. These records are accessible to the state, and should this legislation be adopted, CMRAs would also be required to provide this information to the state upon request. LegalZoom forms around 10% of the LLCs in Maryland. In 2025, we formed nearly 6,700 businesses, and we currently have 1,000 businesses that use their CMRA address for state registration. Many of our customers are small or solopreneurs who do not operate from a traditional bricks and mortar location. For these businesses, the CMRA address protects their privacy and personal security by providing an alternative to using their home address. As you can see from the testimonial submitted on behalf of Nikki Hornsby, a Maryland small business owner, she cites those specific reasons for choosing the CMR options. Your support of this will ensure all businesses get that opportunity. Thank you.
Thank you. Are there any questions for Delegate Chi or her panel? Seeing none, I just had a quick one, Delegate Chi. I know you introduced this, before the last 3 years. Well, it said it was introduced, maybe not by you, but in the fiscal note. And if you said it, I apologize, I was getting organized. Is this already in existence elsewhere?
So most other states actually allow this, yes. Maryland is only, I think, 3 states in the country that currently do not allow that. I think it's an important barrier. It's a small thing we can do to send a message that we welcome businesses. In fact, if you look at the fiscal note, you will love it, because it not only does not have any fiscal impact in terms of cost to SDET, Maryland stands to gain revenue from people registering their businesses in Maryland, because if you recall, I tried to repeal the $300 filing fee every year for 3 years, and it was with no success. If we love people's filing fees so much, why don't we encourage them to file with us as much as possible, right?
Thank you. Seeing no other questions, thank you very much. That concludes the bill hearing on House Bill 308. We will now move on to House Bill 38. Delegate Queen. Bill 38, Delegate Queen.
Okay. All right, good afternoon. Chair Chris Balderrama, Vice Chair Lord Charkoudian, and my favorite members of the Economic Matters Committee. How are you? And I apologize, I did not upload my testimony on time, so I gave you all handouts. All righty, so HB 38, the Financial Institutions License of Affiliated Insurance Producer Mortgage Loan Originators Alteration, makes a change to current law that is needed to reflect the changing structure of the mortgage lending industry. And there specifically how mortgage loan originators and their association with mortgage lending institutions. So just for background, MLOs are licensed professionals who help borrowers in our communities to navigate the residential mortgage process. These MLOs are liaisons between borrowers and lenders, banks, or other financial institutions to secure, negotiate, and process home loans. So all MLOs that operate in Maryland are either state licensed or federally licensed through the National Mortgage Licensing Systems and Registry, NMLS. And so HB 38 does not weaken any of the consumer protections or reduce any of those licensing requirements for MLOs. Current law that has been in place since 2004 has the relationship that an insurance agent who wishes to be co-regulated as an MLO can only do so if the insurance company owns the bank that they're originating loans with. And so this law, as amended, I think you have an amendment that has come from the Office of Financial Regulations. They've looked over this. Updates the current law to state that an insurance agent who is co-regulated as a mortgage lender, a mortgage loan originator, can contract with any licensed mortgage lender. So that's what we're changing, just that association there. And so this will increase consumer choice for all of the communities in Maryland, and it benefits mortgage lenders in our state, and it increases the oversight that OFR will have. So this would align Maryland with the practices that we see in 39 other states that either have affirmative language that talks about that relationship or explicitly prohibits it or limits, and does not explicitly prohibit it or limit insurance agents to be co-licensed as MLOs. So again, we ask that you look at the amendment that has been reviewed by the Office of Financial Regulations and allow this minor change to occur. So we ask for a favorable recommendation. Thank you.
Thank you, Madam Chair and Vice Chair and members of the committee, and thank you, Delegate Queen, for sponsoring this legislation. My name is Tyler Addison, and I'm with Primerica, a leading provider of financial services to middle-income Americans. Our typical household is between $30,000 and $100,000 of income. We primarily focus on affordable term life insurance and mutual fund and retirement investments. Importantly for this bill, we run Primerica Mortgage, a licensed mortgage broker, where we supervise over 3,500 MLOs across 36 states who are also insurance producers with us. And those producers in Maryland specifically insure over 115,000 lives and manage the over $2 billion of Maryland assets. House Bill 38 would give us consumers a single point of contact with someone that they already trust. And in light of time, I would respectfully urge a favorable report as amended.
Thank you, Madam Chair. Members of the committee, for allowing me to testify today. My name is Ace Acevedo. I've been in business now for 26 years with the company. I service over just shy of 15,000 clients. I have 16 locations and 400 financial professionals. For my clients, the path for financial stability is a rare linear. They trust me to protect them, to guide them through the financial process of picking the right retirement plans, and to hand them off to someone else. That process could be very unfamiliar, overwhelming, and sometimes unwelcoming. In House Bill 38, will align Maryland's existing licensing framework with the reality financial professionals face day to day, all while maintaining a strong professional standard and oversight that already governs mortgage loan originators in Maryland. This structure gives consumer a single trusted point of contact without lowering the bar on training, licensing, or oversight. In practical terms, HB 38 helps families who may face a number of barriers accessing credit when one or another already know their financial pictures for their clients' needs. For families I serve, home ownership is a tipping point for surviving to building wealth. HB 38 amendment will help more families achieve this goal because it will allow trusted professionals like myself to meet clients' needs and keep the safety guardians in place. I respectfully urge the committee members to in favor of the HB 38 as amended. Thank you.
Thank you so much. Are there any questions for Delegate Queen or her panel? Seeing none, thank you kindly. Oh, I'm sorry, Vice Chair Charkoudian has a question.
Sorry, I just wanted to make sure the amendments that you're offering are, I was just trying to find them. Do we have them yet, or it's conceptual at this point?
No, they've been drafted. I don't know where they are in the process. So they have been drafted and should be sent to the committee, so.
Okay.
You'll have it.
Thank
soon.
you.
Any other?
And it's minor wording changes, OFR wanted, so they can talk to it if you want to know the specifics about it.
Seeing no other questions, thank you, Delegate Queen. That concludes the bill hearing on House Bill 38. Our next bill will also be Delegate Queen, House Bill 118. So I guess you can stay right there, Delegate Queen. If you have your panel with you.
Yep, I'm sure they're here. Just in case you said that, that's why I brought it all up. All right. I thought I saw folks who were related to that up here. Where did they go? Oh, maybe they did leave. One of them is here. I don't know. They'll be back in a minute.
I think the other part went to the men's room.
Oh, they thought we'd probably be last because of the way they changed it. All right, but we'll get started. So this is actually at the top of the copy that I did, and I just wanted to make sure you had the copy so that I could try to explain some of the differences here. Okay, so again, greetings, committee. I'm presenting Delegate Pam Queen for the record. HB 118, Maryland Money Transmission Act, definition of money alteration. This bill is to provide clarifying language to distinguish what a payroll provider is from a money transmitter. And so Maryland is only a handful of states that categorizes payroll processing companies as a money transmitter. And these states that do it with us are Georgia, Illinois, Nebraska, Tennessee, and Texas. And so just to give some background on the difference, and that's one of the reasons why I put the table there as well. So payroll providers are providing a service for businesses. They help them with their taxes, other regulation, avoiding penalties. They're helping to make sure that employee payments going to the employees are being done on time. And they have making sure all the deductions are correct for the given states that they're operating with and that they are consistent with labor law. So they offer a service and they're hired by an employer to give payroll for their employees. So they are also overseen by the banking industry, NACHA, how they pronounce it, National Automated Clearinghouse Association, and that also governs ACH networks and the payroll processing process, and the IRS to make sure that they are following reporting standards. So payroll providers, think of them as a company that's helping employees calculate wages and salaries, withholding taxes, processing direct deposits for their employees' payroll. And they have, as opposed to a money transmitter, which is a business that is accepting money from one and transmitting it to another. And so this is a whole different sort of business. And so the regulations that we use for money transmitters, because of the nature of their work, would be a little different than you would expect for payroll processors. So a payroll processor, one of the large ones we know, like ADP, a small business, or a business may hire them to handle their payroll. A money transmitter is something like a Western Union, PayPal, Venmo, or Zelle that's doing money from one person to the other. So the regulations and oversight is needed for a money transmitter is much, much more different than what we would do for a payroll processor. And so specifically for some smaller payroll processors, the language and regulations that are needed for money transmitters is a little more onerous and is costly for them. And so this is the reason why we're seeking this distinction. As the letter you have from Department of Treasury, I think it's only 3 companies that fall, that are payroll providers that would then be cut, well, be delineated from the Maryland Money Transmitters Act. So that's the impact it would have on who we currently have operating here in Maryland. And I think it would make them have a difference in fees that they would be collecting, because the money transmitters pay a different fee to be regulated here in Maryland. But that is primarily the difference for that, and the clarifying language is needed so that the payroll processors are operating like the majority of states throughout the U.S. So we ask for a favorable recommendation as well. Thank you.
Thank you. Thank you, Madam Chair. Thank you, committee members, for having us here today. And thank you, Delegate Queen. My name is Robin Imbrogno. I'm the president of the Human Resource Consulting Group, and today I represent TPG and IPPA, together 2 industry associations of small and medium-sized payroll associations that service Maryland businesses. I'm here from a practical, real-world perspective, what this means for employers, employees, and the businesses that support them. Payroll processors are not money transmitters. We don't take money from the public and promise to send it elsewhere. We act as agents of the employers to calculate payroll, pay employees, and remit taxes on benefits and employers' behalf. Including payroll processors in the money transmitter laws that has 2 major unintended consequences. First, it's operationally unworkable. Employers can hire any employee in any state at any time, especially now with remote work. We don't control where an employee can hire. To comply, we would need to get licensed in every state. The cost to bond, license, and audit would exceed revenue, forcing many of your constituents to work with only large national providers, or worse yet, to handle payroll themselves. Second, our industry has significant governance already, which includes that employers sign an IRS Form 8655, which appoints us as the agent of an employer. However, the employer can always view and review their history of payments being made. Additionally, our banking partners audit us throughout the year with Know Your Client, personal financial statements, client risk management, OFAC screening, and much more. We're required to have SOC audits and notch audits. Together, it exceeds $50,000 for my business. In summary, Maryland did its own study in 2014, New York in 2022, which both came to the same conclusion. Licensing payroll processors doesn't increase consumer protection, but does increase cost. Thank you for your time.
Good afternoon, Chair Valderrama, Vice Chair Charkoudian, members of the committee. My name is Drew Vetter. I'm here on behalf of the Independent Payroll Providers Association. Just wanted to contribute that if Maryland were to enact this bill, they would not be unique in the U.S. to ensure that payroll processors are not regulated as money transmitters. Other states have looked at this and specifically declined to do so. As it exists currently, Maryland is one of only a handful of states in the country that do consider payroll processors as money transmitters. Georgia, Illinois, Nebraska, Tennessee, Texas are some examples. There are numerous other states that have adopted language nearly identical to what's being proposed in the bill, including, this is based off of language that's currently in Colorado, Iowa, Kansas, a handful of others. A number of other states have used a similar model for exemption language, slightly different than what we're proposing, but effectively accomplishing the same thing, including California, Minnesota, North Carolina, New Hampshire, a handful of others. Mississippi and Nevada have struck payroll processors from their statutes altogether. So as demonstrated by this information, this issue has been carefully examined across the U.S., and Maryland would be joining the vast majority of states by passing this bill. There are a number of studies that have been conducted on this. There was one in 2022 from the state of New York, which looked at this issue. And then here in Maryland, there was a commission created by the General Assembly in 2014 that looked at this issue and specifically declined to include payroll processors as money transmitters at that time. So in conclusion, we asked the committee to follow the lead of these other states and issue a favorable report on this bill. Thank you.
Thank you, Drew. Are there any questions? Delegate Ahrens.
Real quick, can a payroll processor be a money transmitter or vice versa?
So I think what we're saying is, so right now in the current regulations that are in effect, payroll processors in Maryland are considered money transmitters at this time. The bill that we are proposing would decouple payroll processors as money transmitters.
I got that.
For the reasons
But can they still be a money processor and a payroll processor and a money transmitter if they are that company? Can they do both, even under this bill?
I don't know that any that do.
So under the new proposed language, no, not under the new proposed language.
So you will either be one or the other after this bill?
Correct.
So nobody will be able to do both things, that's what I was asking?
Correct.
Okay,
Yes.
that's all, thank you.
Yes.
Any other questions? Delegate Weigel.
Thank you, Madam Chair. Just to follow up on that, the Commissioner of Financial Regulation says there are 10 payroll processors, 7 of which also do money transfer. So it was my understanding those 7 would still have to register under the money transfer laws, but you're saying this bill,
Yeah, those 7, they still would.
but you're saying this, I thought you just said this bill wouldn't allow them to do that.
My understanding, and I don't know who the 7 are, I believe they do things outside of payroll that would create a different set of rules
But they would
for
still
them.
be allowed to do that, but still be required to register under that law. You stated that they wouldn't be allowed to do that under this law. Is that true?
But that, again, I don't know who the 7 are, but if there are activities that would make them like a Western Union or a MasterCard, or they do Venmo-like activities, then I would think that that would create a different set of regulations for them.
Right, so his letter says that they would still need to retain the license as a money transmitter, but they could also still process payroll.
Yeah, just to clarify, so my understanding of that is, yes, we've been in touch with the Office of Financial Regulation in consideration of this bill, including on that point. So, my understanding is that they identified 10 companies in the state of Maryland engaged in payroll processing activities, but of those 10, only 3 of them were doing payroll only.
Correct.
Right, and so the others were engaged in other types of business services. I don't know exactly what they are, but that still would require registration under the Money Transmission Act.
But they're not prohibited from continuing to do.
That would be my understanding, yes.
And they're still going to be licensed?
Yes, thank
Okay.
you.
Delegate Aronson, did you have a follow-up?
I'm a little bit confused. What did you just say? Because it sounded like you said, no, you cannot be, you have to be either, or you can't be both. That's what you told me. And now I'm hearing there's a possibility you can do both, but other things too. Is that right?
Yeah, so again, my understanding is that of those 10, 7 were doing payroll and other things that I guess would be considered money transmission. So, my understanding, and I think, OFR is here and we can certainly get clarity on that. But my understanding is that they're doing payroll and other things that still do require, regulation under the Money Transmission Act.
So then the answer isn't no, it's yes, they can.
That's my
And
understanding, yes.
you need to define
yeah.
that before we
Just
vote
as a
on the bill.
clarification, yes.
And we'll have that before we vote on the bill, correct?
Absolutely, yes.
But I guess now that you're saying it can still do both, it kind of, why
Can
are we
we
doing
have
both?
OFR come answer this, since they would know better to say, and they know the 10 that are here? Would that be okay?
I will allow it in brevity. They probably should have been part of your panel, but because there is needed clarification, I will allow it briefly.
Yeah.
Thank you, Madam Chair. The answer is yes. So you can, the bill permits, the bill takes, currently, if you're a payroll processor, you are deemed to be a money transmitter. The bill takes out payroll processors, so you're no longer deemed to be a money transmitter. If you engage in money transmission processes, then you need to get a license for that. But you can do one or the other, or you can do both.
But you have to have 2 licenses if you do both.
There's only one license.
There's only one, yeah, we're not licensing money transmitters. You're falling under the regime that was described there.
So one needs a license, the other doesn't.
A state, yeah,
So you'd only have to have the one license, but you still could do both.
correct.
And I guess that brings me back to what am I fixing with the bill?
Because go ahead.
I think the way the question, I think the answer to the question is, if you are acting as a money transmitter and doing payroll processing, so doing those 2 things together, you are going to need a license. The majority of payroll processors do not act as as money transmitters. Some, a handful, you happen to have 7, that handle consumer cards. In this case, they must do money cards, meaning, I'm assuming, I don't even know who they are. They're probably larger companies like an ADP or a Paychex that handle a cash card. They would need some kind of a license to do that.
So who needs the license, the transmitter or the payroll?
The transmitter,
The transmitter. Payroll could do it, they don't need a license to act as a payroll
correct,
company.
correct.
That's what's being proposed by the bill. As it stands, just for clarity's sake, and I'll try to answer the question because I think what you're getting at. So under current Maryland regulations, payroll processing companies are technically required to get this money transmitter license. What we are saying, because the nature of the services they provide are different from what is considered normal money transmission, the examples, the Western Unions, the Venmos, because it's different, because they're acting as an agent of an employer. I'm not paying you through a third party that neither of us has a relationship with. Because they are different, they should not be, regulated and subject to the registration requirements of the Money Transmission Act.
But you see where you confused people when you sat back and just told me payroll needs a license to be a payroll company, and you told me that money transfers need a license to do this, but then before you told me only one of them needs a license. It tends to confuse people like me. And
Yeah,
maybe I'm-
I apologize that there was, lack of clarity, but I understand what you're asking.
That's why OFR,
I think he might have misspoke on that point.
that's it. OFR gave you the definitive answer.
All right, I got to look more into this, but thank you very much. I appreciate it. No,
Yeah,
I'm more
understood. We can
confused than I
follow up with
was
you.
when I first started. So.
Any other questions for Delegate Queen or her panel? Seeing none, thank you very much. That concludes the bill hearing on House Bill 118. We will now move on to House Bill 51, Delegate Taveras. And you have your panel with you, Douglas Denard, Dennis Porter, and then we have a virtual Noah Herman. And again, Delegate Taveras, you're not timed, but your panel is 2 minutes each. Thank you.
Let me get some water. Yeah.
Whenever you're ready.
Let me hear you better. Hold on.
You mean see me better?
No, hear you better. Well, thank you, Honorable Chair Valderrama, esteemed Vice Chair Charcuti, well, she's not here now, but, and distinguished members of this committee. It is an honor to appear before you today. I'm here to request a favorable report on HB 51, the Strategic Digital Reserve Act of Maryland as amended. This legislation is designed to enhance and diversify the financial investments of our state's public funds while addressing emerging trends in gambling enforcement. The Maryland Lottery and Gaming Control Agency has identified significant risks from unregulated online operators. Nationally, illegal platforms accounted for roughly 74% of U.S. online gambling revenue in 2024. Within Maryland, the Voluntary Exclusion Program, or VEP, has recorded 2,691 violations since its inception. Individuals who violate VEP restrictions may face criminal trespass enforcement, and the MLGA-CA has already collaborated with the Attorney General's office to issue cease and desist letters to 11 illegal operators. As amended, this enabling bill authorizes the state treasurer to invest up to 5% of funds collected from gambling violations, currently estimated. The whole collection is estimated at $5 million annually, with a potential investment of $250,000 for digital assets with high market capitalization, currently limiting eligibility to Bitcoin. The purpose of this legislation is to examine whether modest exposure to digital assets can enhance long-term portfolio performance compared with traditional investments, such as cash or money market funds. This goal is to achieve a higher return on general fund investments, approximately, let's say 20 to 25% over 30 years, compared with the roughly 3% return of conservative blue chip money market investments we currently do over the same period. This innovative approach would empower the state treasurer to invest in cryptocurrency while providing staff the opportunity to establish appropriate policy guardrails specifically around the investment of digital assets to best protect Marylanders. This is a Maryland-specific solution. A key feature of Bitcoin is its continuous trading. Unlike traditional stock market, which close Fridays, reopen Mondays, and operate on a 9 to 5 p.m. schedule, 9 a.m. to 5 p.m. schedule, cryptocurrency markets operate 24 hours a day, 7 days a week, providing constant liquidity and real-time price transparency. Institutional adoption also supports this approach. Research shows that small allocations of 1 to 4% of portfolios to digital assets are increasingly common for diversification and returns even within a 10-year period. As of 2025, 3.4% of U.S. pension funds hold digital assets, and most institutional investors plan to increase allocations in the coming year. Treating Bitcoin as digital gold offers the state a potential hedge against inflation and currency risk, aligning Marylanders with emerging best practices among long-term fiduciary investors.
Thank you, Chair.
So for these reasons, I respectfully urge the committee to issue a favorable report on HB 51 as amended. Thank you.
Thank you. Chair, delegates, it's an honor to be here before you. My name is Dennis Porter. I am the CEO and co-founder of Satoshi Action, which is a nonprofit that travels the country to be able to help lawmakers, regulators, and the general public to be able to better understand Bitcoin and digital assets. Our work almost entirely centers around helping states and also lawmakers at the federal level better understand how the technology works and also come up with innovative policy solutions that can help the state and its residents or the country take advantage of the technology. We strongly support HB 51. We think it is a prudent and thoughtful approach, and as the delegate mentioned, a unique approach that is centered around how to help protect state resources. As was mentioned, due to the inflationary environment that we live in, through a report that we put together at Satoshi Action, we were able to demonstrate through empirical data that the dollar has lost roughly 25% of its purchasing power since 2018 alone. This loss of purchasing power can directly impact the ability for the state and the other states and the rest of the country to be able to afford to continue paying for different services. The outcomes are negative if we are not able to pay for those services. Either we need to raise taxes or we need to cut services, both of which are not good for residents. What HB 51 does is it starts to follow a trend that is happening across the country where multiple states have already passed digital asset reserve bills into law. Some of them have been in Texas, one has been in New Hampshire, one has been in Arizona, and there are multiple other states coming on board now to be ready to pass this type of legislation. There are multiple different approaches, and we strongly support HB 51's approach. At the end of the day, because of the dollar losing 25% of its purchasing power, assets like Bitcoin are a strong way to combat these types of losses. And I'll finish by saying that with just a 3% allocation into Bitcoin, you can combat 100% of the loss of purchasing power that might happen here in the state of Maryland. So thank you very much for your time, and I will await any questions.
Good evening, Madam Chair and Madam Vice Chair and members of the committee. I'm Douglas Denard, a husband, father, Maryland resident, and managing partner of DCD Consulting Group, specialized in digital asset education and financial literacy. I strongly support HB 51, the Strategic Digital Asset Reserve Act, sponsored by Delegate Denny Taveras and Kaylin Young. This is not partisan. It's financial technology for all Marylanders. Let us lead on this issue. As innovation accelerates nationwide, Maryland must now step up or risk falling behind. HB 51 creates a digital asset reserve fund without taxpayer dollars by authorizing the state treasurer to invest up to 5% into digital assets, i.e. Bitcoin. Are we pro-fintech or are we stuck like Blockbuster? With gold over $4,500 an ounce, outdated options hurt Maryland in these dollar debasement times. Our aging financial management information systems need replacement. The Comptroller's Cloud ERP push aligns perfectly. Blockchain is efficient, secure, transparent, the do more with less solution. Let's examine the math. $100 million principal at 0.4% APY in the current savings account grows to $112.7 million in 30 years. Versus 20% compound annual growth rate, growth of $100 million is $23.7 billion. Innovation versus stagnation. Let's do more with less. I urge issuance of a favorable report on HB 51. Thank you for your time.
Hello, Chair and Vice Chair. Thank you so much for the opportunity to testify today in favor of Bill 51. My name is Mark Smith. I'm the president and CEO of Carbon Country LLC. We own 2 farms in Charles County, and we're based in Delegate Cheese District. What we're doing is transforming the economics of smallholder farms by adding agrivoltaics, so solar above farming, and carbon removal. How does Bitcoin have anything to do with this? Where we are, SMECO is our utility, and we're able to net meter, so basically sell the power that we generate at retail rates through net metering. However, we can only sell twice what we consume. So we're using Bitcoin mining behind the meter to generate the load that allows us to sell our energy and make our renewable energy projects pencil. The important thing is that we're using Bitcoin just as Maryland would use it, as a hedge and as a savings mechanism. In our case, we're taking the Bitcoin that we literally mint with our own energy on our farm, and we're using DeFi to take out stablecoin loans, in this case, to allow us to use those loans for working capital without giving up the upside. When you take this idea from a Maryland perspective, with a non-sort of regrettable level of investment, $250,000, which is really kind of a rounding error overall in the budget perspective, you're able to really sort of see how these assets behave, create a foundation for our children to be able to have the resources and services necessary given the dollar and fiscal situation. Thank you.
Thank you very much. I have a couple questions from the members, but I'll start off. I have a couple myself. The first one, Delegate Tavares, thank you for introducing this legislation. I see that the bill primarily focuses around the administration by the State Treasurer's Office. And I wanted to know, one, if there was any input from the Treasurer's Office, if you've been working with them for this legislation, because in our documentation here in testimony, it appears that the Treasurer's Office is in opposition to this bill, and I quote, based on all of the information available to the State Treasurer's Office, this office has made the decision to wait and see how the market conditions surrounding cryptocurrencies continue to develop and evolve and so on. So that was part one. And two, the gentleman mentioned that there's different approaches that the existing states that are implementing this legislation. You said there were different approaches in each state. And I wanted to know if you mentioned it, I apologize, I didn't hear it, if this legislation duplicates any of the existing states that already have implemented this law.
No, wait. Thank you so much for that fabulous question. Because yes, we have been in communications and working with the Treasurer's Office as well as the Comptroller's Office on this issue. And I want to say that the bill as originally drafted, I'll be frank with you, I'm in total agreement with the Treasurer's position. And so, based on the letter I subsequently received in which he wanted this bill to be solely enabling legislation, we amended the bill that's before you today, and you should have received the amendments. And that aligns, and I think that it not only aligns, it goes above his request to constrain even his desire to spend the gambling violation monies to 5%. Originally, the legislation as drafted, all the money, $5 million would have gone into this fund and could have been spent, right? And I agree with him. I think that for us, for Maryland, that's not the right approach. Too much, too soon, too fast. And so because of that, we allowed for the enabling, which will create an empty dollar fund, so it'll be a fund in name only, And then, should he choose to be ready to take a portion of those funds in a year, it will be limited to 5% until we could develop and study and assess the right package of policy and guardrails that are necessary for us to put in place. So for us to employ the remainder of these funds and in a long-term strategy.
Thank you. As far as different approaches are concerned, Chair, every state has come up with a different version or model that has passed so far. Most of them are very similar in nature. The ultimate goal is to enable the state treasurer to be able to allocate into digital assets, or the comptroller or the controller or whoever is the official state financial officer. So for instance, in New Hampshire, the goal is to enable the state treasurer to be able to allocate into digital assets with similar parameters around market cap and percentages, but it's more broad ranging and it's within the rainy day fund. So very similar to what's going on, but it's actually using taxpayer funds versus using confiscated funds. Now, and in
I appreciate that response. I can take this offline, but just really quick. So are you saying that the original draft of this bill is closer in line with existing states, or the amended version where you included the treasurer's opinion? Just yes or no, or yes, yeah.
I'm sorry, repeat the question? The version the version that we should be discussing today is the amended version that comes in line with the requested changes by the treasurer.
Right, I understand that. I'm asking if that version is similar to the existing legislation in other states.
I'll be frank with you. Based on my review of other states, I would prefer, and having called my colleagues in some of these other states, I'm not necessarily in favor of some of the things that were done in other states. I think we need to find a solution that's right for Maryland.
Okay, thank you kindly. Delegate Pippy. Sorry. I apologize. We have a virtual member on your panel.
We do.
Before we continue with the question.
Yes, please.
Hello, I'm Jonathan Harris. Can you hear me?
Find a solution that's right for Maryland.
Okay, thank you kindly. Delegate Pippy. Sorry. Can you turn your volume down? That way we can hear you.
I apologize.
Hello, can everyone hear me?
Hello, I'm
Yes.
Jonathan Harris. Can you hear me?
Find a solution that's right for Maryland.
Okay, thank you kindly. Delegate Pippy. Sorry.
Can we address the feedback?
Go ahead, Mr. Herman. You're muted. Okay, there you go.
Yes, hi. Shall I proceed with testimony? Can everyone hear me?
Yes, please.
Okay. So my thanks to Delegate Taveras for her sponsorship of HB 51, Strategic Digital Asset Reserve Act of Maryland, and to the Economic Committee for their time and attention. Given HB 51's identification of $500 million as a minimum investable crypto asset size, I will focus my remarks on Bitcoin, which is frequently described as volatile in the short term, and that characterization is accurate. Over days or months, price movements can be significant. However, when evaluated across longer term horizons and multiple market cycles, historical data has shown that Bitcoin can produce a strong compound annual growth rate relative to many traditional asset classes. Linked research studies and data are submitted along with my written testimony. This long-term perspective is why an increasing number of public institutions, corporations, and nonprofit organizations are evaluating Bitcoin not as a short-term trading instrument, but as a strategic, long-duration asset that requires professional custody, operational controls, and governance. By way of example, my own firm has been and is now engaged in discussions with the United States government, several large US states, the world's largest global nonprofit organizations, and several multinationals to support just these types of long-term Treasury strategies in a compliant and risk-managed manner. With proper technology and governance in place, the acquisition, custody, management, safekeeping, and accounting for crypto assets can be achieved in a manner that is fully consistent with and overseen by the state of Maryland and its treasurer and his or her team. Thank you for your time and in favor of the result.
Thank you, Mr. Herman. Before I move on to the next questions for this panel, I just want to let you know, Delegate Taveras, that we just checked. So whatever amendments you said have been submitted have not, or at least we're not in receipt of them. So just make sure that we are.
Oh,
in
we'll
receipt.
change that right now.
Yes. With that said, we'll move on to questions for this. Right, that's. So we'll take questions for this panel, which is the favorable panel. Delegate Pippi.
All right. Two things. One, the forfeited funds, just because the bill, you guys have spent a lot of time talking about what you're going to do with the funds, but I'm just going to go to the forfeited part. These are regular funds that are forfeited. We're not talking about forfeited cryptocurrency or anything like that. We're talking about forfeited funds from gambling, illegal gambling that's in regular currency that is required to be captured by the state and then essentially put into interest-bearing accounts. And so this bill would allow those regular funds to then be converted into some sort of cryptocurrency investment fund, correct? And I just want to make sure that I'm clear that we're not getting forfeited crypto funds, or is that also an option?
So right now, the amount of money that we're looking at is approximately $5 million, right? That's the pot of how much is collected annually. So 5% of that max at the cap would be 250.
I got you.
Okay.
But it's regular funds, not crypto funds.
Exactly.
Okay.
And when we're looking at that, I mean, I know that we just had Coinbase here. We have to recognize that even illegal crypto, I think in the industry and at least worldwide, is only 0.16% of the industry of what we're looking at. And that's down from 0.63%. So that was what was presented to us, what was it, last week? At good lunch?
Yes.
I'm just saying.
And then the last part of my question is, can you tell us what the feds are doing on this issue? Has there been any movement on
Yes.
this issue, and who's supporting that, and what's the update there?
The federal government just passed the Federal Genius Act, which is now just expressing a little bit of taste pro-Bitcoin, pro-digital assets and cryptocurrency in the federal government. I'm sure anyone here could probably talk much more or better about that. I think we just, while I think that there's a lot of good things in that legislation, and we've had our own representatives voting in support of that legislation, Congressman Johnny O, Senator, and I believe Senator Alsobrooks voted in support, because I just wrote her a letter on the matter. I have some serious reservations because there are, the Bankers Association are very afraid that their livelihoods or the structure of the banking industry is being attacked as they know it. And I'm sensitive to that, frankly. I think we all should, because they pay taxes, they hire jobs, they have to pay into the Community Reinvestment Act, and crypto doesn't, right? So we just want to be sensitive and come to the table with a more nuanced approach.
Thank you.
Delegate Queen.
Thank you, Madam Chair. So I think some of my questions may have been answered. Thank you for bringing the bill, and I appreciate you getting us to think about new ways of doing things. We just heard a hearing from TEDCO, so we need to start to think differently, I'm sure. So just to make sure I'm clear, the Seas funds, this Maryland Digital Asset Reserve, you're only going to be taking, or you're requesting to take 5% of the Seas funds. That's correct?
At most, a capped.
That's the cap for that, good.
Until we have a good policy framework in place that we feel comfortable with around the investment of digital assets. I think at this time, standardization around this issue, at least for states, may not necessarily be in place yet.
Understood, okay. And so the amendment will change based on the treasurer's response to
And
be
comfort zone.
enabling legislation, not a requirement. Is that correct?
Yes, ma'am.
Okay. And so when we think about what other states are doing, I know some states have different models. Some are using the treasurer, some are using comptroller. But what I wanted to get a sense of, and maybe you can let me know later, is their language enabling or is it required? How many, do you have any state that has required crypto be a part?
I think most of it was required, but.
Yeah, so it's a great question, Delegate. There's a number of different models that have been attempted. The most popular model is enabling language, which is passed in New Hampshire. It also passed in Texas. Now, Texas went a step further and did appropriate $10 million. They've already made a $5 million purchase. In Arizona, the model is to use unclaimed property funds, which is a very popular model that is only passed in Arizona, but is being implemented or introduced in a number of different states, including some of your neighboring states. In fact, also Massachusetts has introduced this language. Senator Feingold and Representative Worrell there are doing great work, and we're going to be having an informational education day on the 12th in Massachusetts. But that's enabling language, but it also includes the same parameters of a 5% cap and a $500 billion market cap is necessary, which limits similarly to this bill, limits it to very high quality digital assets with a very good, strong reputation. We're not trying to, when we work on these bills across the country, in no way, shape, or form are we trying to create language that would enable someone a state to invest in low quality digital assets.
Understood, okay, thank you.
Delegate Weigel.
Thank you, Madam Chair. So I'm a little confused on the fund. You said there's $5 million collected annually, or there's $5 million in the fund total?
No, 5 million usually on average is collected annually over when you're looking at illegal gambling violations.
All right, so what's the balance in the fund currently?
No, right now we don't have a fund, and right now right now the money
So it
that's
just goes to the
collected.
general fund?
No, the money that's collected currently goes into the general fund.
Okay. And then where'd you come up with the 500 billion?
We're looking at the stability of the market of the product, right? You don't want to invest in something that has a low market cap, because the lower the market cap, the higher the volatility.
So according to the fiscal note, that excludes everyone but one business.
That's right.
Crypto.
And we'll probably increase the market cap the minute we get us something better, bigger, better, and prettier.
That was intentional?
Heck yeah.
Okay.
Our money needs to be protected.
So I guess currently it's only allowed to be invested in the bank in an interest-bearing account. Why would you just limit it to cryptocurrency? Why couldn't we invest in equities and bonds and the like?
We already do. I mean, the thing is that the return rate, compounded return rate. Those items only probably return 3%, right? Because we invest currently on blue chip money market funds, and there's probably a 3% return. That's what we're doing right now. I mean, we've got the potential of making 30%. Do you want 3% or do you want 30%? That's what we're talking about.
Page 3, line 7 says that they shall deposit seized money in an interest-bearing bank account. It doesn't say that you're allowed to invest in equities or bonds. You're saying you are allowed to invest in equities and bonds currently?
No, right now, we could do, the treasurer invests in money market accounts and bonds, and we buy bonds every day, right? That's what what's the meeting?
I'm talking about the current language in the bill. It says that they must deposit the seized money in an interest-bearing bank account. My question is, why would you just select cryptocurrency, and why not also allow investment in equities?
So what we're trying to investigate here is what we're trying to investigate is how effective is taking money in the general fund and investing it in cryptocurrency and trying to isolate this digital asset to see how well it functions. And so we could gain the security and tolerance. So that we have the risk tolerance for long-term compounded, for investment and long-term compounded returns.
I'm still not clear on why you would select one cryptocurrency, which only one crypto qualifies, and not open it up to an equity market. But
So it's a great question. There's a variety of reasons why I believe that it's important to limit the amount of digital assets that can qualify. Now, some states are choosing to move that number around, ranging anywhere from 100 billion to 500 billion. We do believe there should be some limit in place. But even if you go down to 100 billion, that only includes the top 5 cryptocurrencies. And the reason why we advocate for the higher limit is because Bitcoin is the most secure, it is the most safe. We're not against necessarily changing the limit. It's not like a hill we will die on, but we believe that it's important, especially for a state that's trying something like this out for the very first time, to go about it doing it in the most safe and secure way. Bitcoin is the most safe and secure. It has a limited supply, which means that it's at 21 million. It's never going to go up, and it's never going to go down. There's only a limited amount that's available. Some other cryptocurrencies have changing supplies. So as an example, if the state were to invest in something like Bitcoin versus another cryptocurrency with a fluctuating supply, you don't necessarily know at all times what that fluctuating supply will be. So it could impact the long-term duration of the investment itself. Additionally, Bitcoin is incredibly decentralized, so it doesn't operate like a company at all. There's no CEO. There is no executive team that makes decisions, which also means you don't have to depend on what those decisions will be. You know, there's a lot of companies that start and fail. We're not against necessarily state funds being invested in equities, but when you're thinking about an equity versus Bitcoin, an equity, you are very much reliant on the decisions that a company makes every day. That company could go bankrupt. Bitcoin can never go bankrupt because it doesn't rely on the managerial duties of an investment or an executive team.
Can I just add something? Yeah. You know, it is also a bet on financial innovation. You know, Maryland it's not unique to invest a fund in regular securities or money market accounts. This basically stakes a claim that Maryland is pro financial innovation. And so I think that's really kind of the differentiator here. And Maryland's making a small bet and leaning forward on digital assets and financial innovation. So that's really what's happening here.
And you have to remember that, again, when we're looking at these other more traditional investment strategies that are part of like the regular marketplace, those are, again, working from Monday to Friday, 9 to 5. This is extremely different. You want to compare apples to apples. This is the only digital assets are the only product that are working 24 hours a day, 7 days a week.
And I understand your amendments, it would be up to 5% and enabling not required, is that?
Of the where we're looking at the pot of money of the $5 million that are illegally gambling funds that are seized.
Okay, thank you.
Thank you, Delegate Weibel. Delegate Adams?
Thank you, Chair. So who mentioned the returns on Bitcoin, like you could make 30, is that was you? I mean, isn't it also likely you would lose 30%?
Yes, and great question. This is why we've had our conversations with the Treasurer's Office. We talked about investment strategy. And one of the things that we do at DCD Consulting Group, and we've been doing, providing financial literacy and digital asset education, is also to educate about technicals and when to enter and to exit. Similarly, the same thing happens in traditional assets. Would you buy gold at $5,500 yesterday? It dropped over 10%. Silver dropped over 40%. Oracle dropped over 40%. So volatility is a part of our world, but it shouldn't stop us. We should know when to enter and when to exit.
So the concept of currency is that it's a store of value that can be liquidated. It's going to hold its value within certain constraints. And yet you're presenting this as a fund, which means that it's a place to put a store of value. And I don't view Bitcoin as a store of value. I view it as speculative, as a thing, and I'm even reluctant to call it an investment. And I'm unsure why the state of Maryland would participate in a speculative exercise, but we want to try it out. Is that what this bill is? We just want to try it out?
Yes, sir.
We're willing to lose it all just because we
No,
want to see what.
no. I'm not
Lose whatever you
crazy.
want to put in the fund.
I'm not crazy.
Well, I'm saying that whatever money goes into that fund, I believe it is entirely possible that you could lose all of it. Let me ask you a question, because that's not a question.
Can I speak to that point?
Well, sure.
If I may just kindly ask the members, when you have a question, could you pose it directly to whom because we're not going to have back and forth banter on one question. So if you could ask specifically, and if someone can't answer it, then whoever can,
Well, I
please
asked the
do.
sponsor in this case.
Okay.
Yes, go ahead.
Thank you. And thank you for that question, because I hear your concern and I share it, very much so. And because of that, I am extremely sensitive to wanting to protect our funds and, but being innovative to want to grow our funds. Nobody here wants to pay taxes. But imagine if you can have a stabilized form of return over 30 years, that I don't want to, we can never say that we're going to guarantee you a 30%, because nobody can do that in the business of investment. And I hope you could agree with that. But let's talk about these numbers, okay? Total, there were $3.7 trillion invested in 2024. And there is a global expectation of $97.7 billion just this year in 2026, of which we have 18 billion of that just in the US, of just trading. We're not talking about the long-term return on that. It's already happening.
All right, so I guess where I'm headed with this, and I'll ask the final question and we'll let it roll. But you know, my business has some investments. I would say to the extent that cash is being invested, we would have a prospectus. We'd have to make a valuable decision off of best available information. And I'm doubtful that Bitcoin has a prospectus. It doesn't have an investor profile that helps them understand what the wins or the losses might look like. And the only one that I can come to, and I'll let you have your last say, is it not possible that the Bitcoin could go back down to $19,000 or $5, because it's not based on anything other than a market's value, what something that's scarce is. That's not a store of value. That's just a pure and unadulterated bet. And I'd ask you just to comment on that, and I'll leave it there.
Well, I'll just say my piece. I mean, we all invest our money in stocks. I mean, I hope we do, because it does offer a very good return historically, but we can't speculate on how it will move in the future. Yeah. And we take risks on that as well, personally. But my only concern is that when we're looking at these types of speculative, as you call it, speculative type of digital currency, this is digital gold, right? This is what we call digital gold, which is in your reading prior to coming to this hearing. But my concern with that is that the reason why we're setting it at 500 billion is because we want to make sure that we are working with the most stable of digital assets, right? Even in the most egregious of scandals in this country, which was as of, I think it was last year, 2 or 3 years ago, with FTX, their market capitalization at its peak was 32 billion. It doesn't even come close to 500 billion. So I just want us to rest assured that we're looking at investing in one of the most stable of assets over the long term. And I don't know if you want to address also.
Okay, thank you, Delegate Adams. Seeing no additional questions, that concludes this panel. Thank you, Delegate Taveras and your panel. We'll now move on to the unfavorable panel. We have one person virtual, Mr. Jonathan Harris.
Hello, committee members. Thank you for the opportunity to testify this. I apologize for my interruption earlier. I was confused. Hello, I'm Jonathan Harris here to testify in opposition to HB 51. I'm a chartered financial analyst with 28 years of experience working in quantitative finance and technology. I don't have any financial stake in cryptocurrency, and when I first heard about it, I actually was fascinated. And then when I investigated it, I came to the views that I now hold. I think the most critical thing to understand, and this goes to some of Delegate Adams' questions, is that how Bitcoin makes money. And there's only one way. The proponents recruit new buyers to purchase Bitcoin from existing ones. So instead of false financials, which are used in Ponzi schemes, there's a lot of this fancy techno talk that gives a veneer of sophistication. Funding this cryptocurrency reserve is not innovation. The only strategic thing in this proposal is it's part of a strategy to recruit new buyers, to enrich a small group of earlier buyers, and that's at the expense of the rest of society. And that's why there's no equity investments in this proposal, no bond investments. The purpose of going around the country to the state legislatures is to get them to, first of all, be a backstop, and second, help promote it by buying it. If Marylanders want to gamble, they can. And please, this is taxpayer money because you control it.
Thank you, Mr. Harris, for your testimony. Is there any questions? Are there any questions for this witness? Seeing none, thank you for taking time out of your schedule, Mr. Harris. Seeing no more questions, that concludes the bill hearing on House Bill 51. We will now move on to House Bill 259, Financial Institutions. This is the departmental bill.
Little confusion there, sorry. Good afternoon, Chair Valderrama, thank you, and distinguished committee members. For the record, I'm Tony Salazar, Commissioner of Financial Regulation, and I'm here with this panel today to present House Bill 259, request a favorable committee report on the proposed updates to the Access to Banking Act. The purpose of this bill is to maximize the impact of that Access to Banking Act in support of the governor's vision for an equitable and competitive financial system that benefits all Marylanders. The panel will detail the changes in the Access to Banking Act that are set forth in the bill, including the extension of the date by which the commissioner may match investments made by participating state-chartered institutions. Any fiscal impact associated with this bill will be manifested in the Depository Special Fund, which is funded by the financial service industry and has a sufficient balance to handle the expenses brought about by the program. Overall, the updates have been introduced because we want to enhance and strengthen the Access to Banking Act. I'll turn the floor over to my colleagues, Deputy Commissioner Mike Sprouse, to be followed by Maryland's Chief Innovation Officer Francesca Iafreda and Assistant Commissioner Stephen Clampett, who is with us also to answer any technical questions that the committee may have. They are the people that have put in the hard work and have been instrumental in implementing the Access to Banking Act over the past year or so. So they're best positioned to provide the committee with the details on the enhancements that are set out in the bill. I want to thank you for your time, and I'm going to turn it over to Deputy Commissioner Sprouse.
Thanks, Commissioner. Chair Valderrama and members of the committee, my name is Michael Sprouse, and I'm the Deputy Commissioner for Depository Supervision at the Office of Financial Regulation. It's my pleasure to be here with you to discuss HB 259. This bill builds on the 2023 Access to Banking Act by strengthening existing tools that expand access to financial services in Maryland's low and moderate income communities. First, the bill expands the purpose of the Maryland Community Investment Venture Fund. The MCIV fund was created to support small businesses through partnerships between fintechs and Maryland state-chartered banks and credit unions. As we've implemented the program, we have heard clearly from financial institutions and the MCIV Advisory Board that consumers face many of the same access challenges as small businesses. This bill allows future fund dollars to support access to financial products and services for both consumers and businesses, enabling OFR to fully carry out the Act's mission of promoting inclusive innovation through Maryland's financial institutions. Second, the bill builds on the success of the existing assessment fee credit for institutions that maintain or open branches in LMI communities by creating a new assessment fee credit for institutions that offer a Maryland Opportunity Account. According to a 2023 FDIC survey, over 36,000 households in our state remain underbanked or unbanked and have difficulty accessing basic checking or savings accounts. Without basic banking services, households face greater difficulty managing everyday transactions, growing savings, and building relationships that lead to affordable credit. Aligned with the National Bank-Owned Framework, Maryland Opportunity Accounts will meet standards set by the Commissioner to ensure these designated deposit account products are safe, affordable, and accessible, and the participating financial institution will be recognized with a fee credit. Together, these provisions strengthen the Access to Banking Act and support household stability, community resilience, and a fair and balanced financial services industry in Maryland. Thank you again, members of the committee. We urge a favorable report on HB 259.
Good afternoon, Chair Valderrama and distinguished members of the committee. My name is Francesca Iafreda, and I serve as the Chief Innovation Officer for the state of Maryland within Governor Moore's office. The Governor's innovation team is tasked with identifying and developing new solutions to solve our biggest challenges, specifically improving economic mobility and reducing child poverty. In our work, we identified a persistent barrier, the capital desert, in our low to moderate income communities. Without sufficient capital, Marylanders are cut off from the opportunities needed to build sustainable wealth, grow local economies, and break the cycle of poverty. That is why the Maryland Community Investment Venture Fund is so critical. We started our partnership with the Office of Financial Regulation to operationalize this innovative initiative nearly 1 year ago. Through deep engagement, including data analysis, small business surveys, and focus groups, we uncovered the barriers entrepreneurs face. We then used our understanding of these challenges to build a national pipeline of high-impact fintech solutions and helped connect them to our state-chartered financial institutions. To give examples of the fund in action, we're seeing partnerships form around technology that fixes gaps in traditional credit, allowing lenders to approve viable applicants who would otherwise be overlooked. We've also seen solutions that integrate financial education directly into the banking experience, solving a critical challenge. We're proud to report that as a result of the MCIV's team's efforts, we've already received several applications for this inaugural round of grant funding. We support HB 259 because it scales the success. While small businesses are crucial anchors for local economies, this legislation unlocks a wider range of solutions and expands our impact to all residents in low to moderate income communities. This expanded scope directly advances the governor's agenda and our North Star since day one, building new innovative pathways to work, wages, and wealth for all Marylanders. I strongly recommend a favorable report on HB 259. Thank you.
I'm just here for any technical questions.
Okay, what is your name?
Stephen Clampett, Assistant.
Okay, I have that. Okay, are there any questions? Shockingly, none. Okay. With that, no questions for this panel. I will call the next. Thank you kindly.
Thank you.
Thank you, Chair.
We have Tisha Edwards, Robin McKinney, and John Ratsakis.
Let's mix up the order. Yeah. Why don't we go this way, Tisha? You go first.
Okay, sure. Thank you. Good afternoon, Madam Chair, Vice Chair, and members of the distinguished House Economic Matters Committee. My name is Tisha Edwards, and I'm proud to serve as the President and CEO of the Maryland Bankers Association. The MBA, founded in 1896, is the premier advocacy organization for Maryland banks and bankers. In my role as the President and CEO, I serve on the Maryland Community Investment Fund Advisory Board, which advises the Office of Financial Regulation on the direction of the fund. I'm excited to be here today before you in strong support of House Bill 259, which builds on and refines the Access to Banking Act passed by this body in 2023. The Access to Banking Act took meaningful steps to expand access to credit in traditionally underserved communities. I'd like to thank Commissioner Salzar and the entire OFR team and the Governor's Office of the Governor's Innovation Team for their work in getting the fund up and running. House Bill 259 broadens the impact of the act by ensuring the benefits of bank and fintech partnerships reach entire communities, strengthening financial inclusion at the household level. House Bill 259 also addresses a barrier in the current assessment offset credit program by allowing Maryland chartered banks to earn credits when they open a Maryland Opportunity Account, which offers affordable, accessible transaction services to residents who may not otherwise have a reliable connection to the banking system. Maryland banks remain deeply committed to improving access to credit and financial services in underserved communities. House Bill 259 is a thoughtful and practical refinement of existing law that supports this mission, and I urge you to give House Bill 259 a favorable report. Thank you.
Good afternoon. I'm John Bratsakis. I'm the president of the Maryland DC Credit Union Association. Chair Valderrama, members of the committee, I'd like to thank you for allowing me to testify in support of House Bill 259. There's 61 credit unions that serve 2.3 million Marylanders here in the state. And of that, 50% of our credit unions are low-income designated credit unions. And this bill would allow for the expansion of the fund to help support local and consumer-driven solutions. And what I mean by that is it would allow for those solutions that we're seeing, just like it was mentioned earlier, in small businesses to help lend broader and deeper into communities. We're seeing that in other local communities around the country, other fintech solutions that are helping to lend broader and deeper, increasing approvals by 30%, without increasing risk to the financial institution or the safety and soundness of the institution. And it is reaching into low to moderate income communities and helping bring affordable financial services to those areas. So with that, we would ask for a favorable report from the committee. Thank you.
Madam Chair, members of the committee, I'm Robin McKinney. I'm co-founder and CEO of the Cash Campaign of Maryland. Cash stands for Creating Assets, Savings, and Hope. And we help low-income people with their finances. Most of the folks that we work with earn less than $20,000 a year. And we have about 75% of the people that we work with have a bank account, but many are also considered underbanked, which means that they kind of come in and out of the banking system. And as we know, in order to set up financial security, to be financially capable, available. We believe that knowledge, so financial education plus access to good, affordable products is what leads people to financial wellness. So we're here in full support of this bill. I wanted to particularly underscore the Maryland Opportunity Accounts. Cash runs the Bank on Maryland Coalition, which has worked with over 29 financial institutions in the state of Maryland to make affordable banking happen here. And that is the standard that's being used for these Maryland Opportunity Accounts. These are accounts that banks and credit unions, whether national, local, state, the whole mix, are able to access. And it's really important that as we're getting people into banking, that we're giving them guardrails and also providing an incentive for the institutions that are offering them. So with that, I urge a favorable report.
Thank you, Ms. McKinney, and the rest of the panelists. Are there any questions for this panel? Seeing none, thank you very much. That concludes the bill hearing on House Bill 259. We will now move to our last piece of legislation, House Bill 237, Departmental Bill Commercial Law Earned Wage Access Revisions. Welcome, Madam Secretary.
Good afternoon, Madam Chair. It is a delight to be back before the Economic Matters Committee. Distinguished members, wonderful to see all of you. For the record, I am Portia Wu. I am the Secretary of the Maryland Department of Labor. Last year, the legislature passed HB 1294, which applies Maryland loan laws to earned wage access products. Maryland has a strong tradition of providing financial consumers with consumer protections, and the passage of that legislation reflects that heritage. That bill established a basic set of rules around EWA products and provided the Office of Financial Regulation with the tools to provide ongoing supervision of them. I just want to spend a minute to refresh the committee's memory about the nature of the products and how much they have grown in popularity and how many Marylanders use them. Over the last few years, companies report over 300,000 unique users of EWA products in Maryland alone. And while EWA products do allow workers to access cash as an advance against their paycheck, these products do come at a cost. The Office of Financial Regulation did a market inquiry of activity in the state. I believe a summary of it is attached to our written testimony. I'll just hit on a couple highlights. Between 2019 and 2024, our inquiry shows that Maryland consumers paid over $35 million in fees on these advances on over 5.5 million transactions to access their own pay early. They also showed that these products are likely to be used repeatedly and by younger workers, by workers who are disproportionately in lower income communities and have lower financial literacy. Our findings also found that EWA products can come with complex fee structures and high fees that would not be permitted for other types of consumer loans. Workers may borrow multiple times against the same paycheck, piling up fee after fee and putting themselves in a cycle of debt. On top of that, some providers seek so-called tips from borrowers, but those tips aren't actually going to any workers. They're merely an additional service charge. As I mentioned, last year's legislation placed a very important framework around these products, and the bill we're bringing today does not seek to disturb that framework. Rather, we suggest some critical areas that we believe still need improvement. While we strongly support innovation, new technology should not be a backdoor to old harmful practices to reemerge under a different name. Specifically, the governor identified in his letter, which I believe we've also submitted, he sent up a letter after the passage of that bill into law last year. He identified two specific areas of concern. One, EWA loans are exempted from some of Maryland's core consumer protections, including anti-discrimination protections and truth in lending. We believe this was an unintentional drafting oversight. I don't think anyone believes that products that might violate those kinds of basic protections should be offered in Maryland, and we suggest some language to address those issues. There's also language actually that would support help product users and companies to the extent they're relying on guidance from the Department of Labor. Second, EWA providers continue to allow to be enabled to request a tip from consumers. The legislation before you squarely addresses these concerns. I'll turn it over to Commissioner Salazar to talk in more detail, but we strongly urge a favorable report. It's important that these products continue to be offered, but they have to have critical safety guardrails for Maryland consumers. Commissioner
Okay, thank you, Secretary Wu. Good afternoon, Chair Valderrama and distinguished committee members. I am Tony Salazar, Commissioner of Financial Regulation, and it is my office that regulates earned wage access providers and their products. And as the Secretary said, we're testifying in strong support of HB 237. Last year's bill established a regulatory system for EWA providers, which, among other good things, required that these providers get licensed. To handle that licensing, OFR set the providers up in the NMLS system, and when the 2026 licensing season opened last year, it started processing the EWA licensing requests, along with approximately 18,000 other licensing requests that it received. I'm pleased to report that OFR has processed almost all the requests, including having fully processed about half of all EWA licensing requests received to date. Staff is continuing to process pending licensing requests just as we do with all the other pending licensing requests. But with that said, we at OFR agree with the comments from the governor that he made last year that consumer protection can be improved by making just a few simple additions to the bill. First, we seek to prohibit lenders from asking for tips. I don't know of any other financial service provider group that solicits tips. Adding this provision protects borrowers and workers of limited means from exploitive practices that pressure them to pay these fees as tips. In 2024, we found that EWA users paid approximately $282 to access their own wages. Consumers would benefit from a prohibition on tips. Second are the simple provisions to ensure that EWA lenders are held to the same standards as other financial service providers, prohibiting false advertising and discrimination. These provisions are critical to supporting the governor's vision for a fair, robust, and competitive economy. And with that, I request a favorable report from the committee, and we're here to answer any questions. I'm also here with Deputy Commissioner Kat Highland, who is responsible for the area that oversees our non-depository activities under which the EWA falls.
And I'm here for questions and answers. Thank you.
Okay, thank you, Ms. Highland. Are there any questions for this panel? Seeing none? Oh, I'm sorry, Delegate Amprey. My apologies.
I just hit the button, so I won't hold it against you. Thank you, Madam Chair, and thank you all for coming today. I appreciate you all's, first of all, I appreciate you all being committed. I heard the word innovation used earlier. I truly think that this committee, we have to really become a committee of innovation. I think that when you think about where this state is, we have to continue to figure out ways in which we attract businesses, be a place of economic growth, be a place for opportunity, and I'm appreciative that we're there. And I just want to make sure that we are doing it in a way where we're not creating more confusion for industries. I think that's one thing I'm just worried about here. And I'll be honest, I was the co-sponsor of the bill last year, presented the bill, defended the bill on the floor, worked closely with the industry to better understand how to move forward with the bill. So I would love to be continued to be involved in those conversations. I guess my question immediately is you gave the data point for, and I have several questions, so forgive me. You gave the data point for 2019 through 2024, 35 million in fees. Is there any, is there a better understanding of the number in fees since the bill has been introduced, that we introduced last year, to try and put more caps and to do more regulatory? Because you gave the data from 2019. We haven't, now we're trying to regulate it. So using numbers from pre-regulation is hard to kind of capture how well this bill is already working. I just worry that we just put it in and retweaking it again so soon. It's just, I'm worried that the numbers are getting, muddled on what the actual effects are there. So any idea of what the numbers are for fees since 2020, I guess since 2025,
So,
2025?
Sorry, Delegate, the bill provided for the office to issue regulations to set forth that, and we're in the process of issuing those regulations, so we haven't collected the data on that yet. So that's in process, yes, sir.
And then I guess the other question I have, and just as a comparison point, and why I think the EWA products are are very useful in comparison to the payday loans or overmaxing your credit cards or just overdrafting on your bank account. In comparison, do you have any comparison points on the comparison points between the fees that you would see from EWA products compared to the fees you would see via traditional banking fees that are somewhat abusive, in my opinion? Any comparison as to which one's more?
Delegate, if I think I understand you correctly, you're asking, like, for example, an overdraft fee or other fees that one might
Because
be
it's
faced
easy
with.
to calculate these fees because it's like an explicit fee, whereas like if we were to capture like what the average consumer who's in this same, $25,000, $50,000 range where they're, overdrafting every month or they're maxing out credit cards, how do we capture that fee comparison?
Delegate, I think, I don't have a comparison in front of me, but I think the testimony from last year, and we understand the reason that consumers won't choose these products is because in many instances, these fees were lower. I also want to remind the committee that at the caps that were placed in legislation last year, many, and we won't speak for the companies, but I believe many of them testified that their fees did not exceed those caps. So I think the numbers we've reported, we assume that many similar fees are continuing to be charged to what was there in the past. I do think the legislation, it was important to put caps in place because of, those are the fees that are charged today, but as we've all seen with some of these financial apps and things, like things can change really quickly.
Mm-hmm.
So I think having the guardrails in place is important.
Yep, and then you said that of the licenses that you've approved or people who've applied for licenses, 50% have been approved or 50% have been processed?
Yes.
And so roughly how many do we have processed as of now?
Well, those, the only reason I didn't say that half of them were approved is because one of them is, it's been processed, it's pending approval. So half of them have already been approved. And then the way the licensing process goes is companies go into the NMLS and they upload information, right? And then if our staff has questions, they go back and forth. And so sometimes we don't have all the information. We have to go back. They have questions about how the NMLS works. And we have 18,000 applications. We have worked through that, and we are continuing to work with the rest of the applicants that need attention.
Got it. And last set of questions here. Again, I think a lot of our conversations could be done offline. I don't want to, look, it's
happy to.
We have 3:14. I know we have all have long days. Just to get a better idea of some of the enforcement actions that have been put forth. So I know I've heard and I've seen there's been enforcement actions brought towards certain companies. Have those enforcement actions been brought forth towards companies who were licensed, who are now licensed, and now they're being enforced against, or they're being the actions are being brought to them before they could be licensed? I'm trying to understand because we put in a new framework that we want people to abide by. To then bring enforcements against people, companies is kind of strange to me as far as like when and how you do it. So I'm trying to understand like how you all have been approaching that process.
Well, we've been approaching EWA licensees the way we approach all licensees, right? So we haven't been given any special treatment in terms of the timing of this. And then in terms of enforcement actions, we haven't taken any enforcement actions against companies that have licensed.
Okay.
Now, we are in continued discussions with some of the companies as they provide us with information and we learn what their model is, how they've been operating. And so that's all part of the licensing process.
Got it. Okay. And then just for clarification, so this bill would bring Title 12, they would be under Title 12, and then, is that correct?
This bill isn't going to change. All this bill does is, you may be referring to the non-discrimination and the other pieces.
Right.
So
Yeah.
all that does is, I guess it was a drafting shortcut, right? So those provisions in the lending law apply to all of the loans, so they're already there. Why recreate the wheel when you can say you all are supposed to be subject to these same provisions? And so it's not intended to change or add. And it does provide the safe haven for companies as well. So if they take actions relying upon our advice or the AG's advice, then they have a safe haven for that.
Okay, great. Thank you so much.
Delegate Aarons?
Thank you, Madam Chair. Briefly walk me through an overdraft and how that works with this. You have overdraft penalties in here. It has a statement about you got to pay an overdraft back. The
Oh,
consumer's gotta
that's
pay.
last year's legislation that passed.
That's what?
Last year's legislation that passed.
Oh, okay.
That stated that the companies couldn't make the consumer responsible for the overdraft fee as a matter of contract in their terms and conditions.
Okay. Okay.
Any other questions? Seeing none, thank you very much, Madam Secretary and the panel. We'll move on to more favorable testimony. Anthony Davis, Marceline White, Leonard Howie, Robin McKinney, and Wilson Meeks. And whoever begins will just move on down the row.
Are we missing each?
Please begin.
Good afternoon.
All right,
Good afternoon. My name is Anthony Davis. I'm an attorney and director of advocacy for Maryland Legal Aid. Maryland Legal Aid is a nonprofit law firm that provides free civil legal services to low-income Marylanders and vulnerable residents, including survivors of domestic violence, seniors and nursing home residents, people with disabilities, veterans, and the working poor. Many of our clients are low-wage workers and households living paycheck to paycheck. For them, even small, repeated charges, such as expedite fees, subscription fees, and repeated account debits can trigger bank overdrafts, resulting in missed utility payments, missed mortgage payments, and cascading instability. Maryland Legal Aid supports House Bill 237 because it takes targeted, enforceable steps to reduce predatory cost structures in the earned wage access market, especially by prohibiting tips. And because it moves Maryland towards stronger guardrails against the payday lending models that seems to have reemerged through these apps. Maryland Legal Aid's first concern is to protect consumers. And we feel that it's never too early to do what's best for our clients who are struggling families and people who are trying their best to just make ends meet. My service is really directed at helping consumers and clients meet their needs, and I engage a lot in consumer bankruptcy, foreclosure defense, and helping with housing. I see a lot of use of the earned wage access products, and though I know they are vital to helping people make ends meet, I also see that there's a trap by design, and that's what we're concerned about. So we support any efforts to further strengthen this product in the, in the benefit of consumers. Thank you.
Good afternoon, Chair Valderrama and members of the Economic Matters Committee. My name is Leonard Howie, Deputy Attorney General. I'm here to testify in support of House Bill 237 because it corrects flaws in the earned wage access legislation that passed in 2025, flaws that place our most economically vulnerable populations at risk. We acknowledge that people often need to access their wages as soon as they are earned, but sometimes before they are received. This access, however, needs to be free from predatory practices. While House Bill 237 provides critical updates, the OAG is focused on two proposed amendments. The first is establishing monthly caps, and the second is in addressing the problem of stacking. While there are existing caps on transaction fees, providers are currently able to structure their products in a way that encourages consumers to take on multiple loans, each of which are subjected to a separate fee. And when you add the ability to charge unlimited subscription fees to access the lending platforms, we are concerned that consumers can easily end up paying a far higher annual percentage rate on these loans than is reasonable. Stacking occurs when consumers get loans from multiple EWA lenders during the same pay period. When this happens, costs can quickly eat away at paychecks for those who are already teetering on a financial cliff. While consumers are ultimately accountable for their own decisions, we propose that EWA lenders are best situated to prevent stacking. They have the tools, they have the technology to provide early warning signals for the unwary and at times desperate consumer. By way of example, Connecticut also passed an EWA law in 2025. Their law contains a similar requirement to what we seek here in Maryland, and that is an affirmative obligation placed upon EWA providers to establish policies and procedures that will flag the issuance of multiple loans that total more than a consumer's unpaid wages during a single pay period. We're happy to take, looking forward for a favorable report, and we're happy to take any questions that you have.
Good afternoon. I'm Bill Meeks. I'm the unit chief for a unit in the Consumer Protection Division of the Maryland Attorney General's Office that specializes in issues having to do with lending and finance. I'm here to help answer any questions that you all might have about the amendments that the AG is supporting.
Good afternoon. Again, I'm Robin McKinney, co-founder and CEO of the Cash Campaign of Maryland, helping low-income people with their finances. We have been here working on this earned wage access bill for a number of years, and some of you who have been around know our work that we've done on payday lending and different things over the years. We did a survey of our clients. We serve between 25,000 and 35,000 people a year across the state. We're in 19 out of the 24 counties. We did a survey to find out what their experience with earned wage access has been. And two things that came up for us were, one, confusion around tips and if they were voluntary or involuntary. I think part of the confusion for them is that the tip is requested before the service has been completed, before they know that the loan has been approved. And so as they put in a zero tip, that there were repeated screens, in some cases up to 17 different asks throughout the transaction for a tip before they would find out if their loan was approved or not. And then the second issue is related to stacking, which was just addressed by the Attorney General's office. We have seen this is a major problem, people borrowing the same $100 from multiple places. And this is a really easy technology fix for companies to add into their tech stack. When the Key Bridge collapsed, we were able to offer a cash assistance program to the workers that were out of work while everything was trying to be addressed. And we are a small nonprofit, and through the tech company that we use, we were able to go into people's bank account and to be able to see, did they get this funds from anywhere else? We could verify their income and all sorts of other things, all through a very easy technology process. We know companies are at the ready to help us with that. So we're here in full support of this bill and would like you to also consider the stacking amendment. With that, I urge a favorable report.
Good afternoon, Madam Chair, members of the committee. For the record, my name is Marceline White. I'm Executive Director of Economic Action Maryland Fund, and we work on housing justice, economic rights, and research, as well as provide direct services. We're here in strong support of the legislation. I just want to make a couple points. This year, the Speaker and Governor Moore have been talking about affordability. I know the House thinks of that as one of the North Stars of this body this session. And I want to emphasize that these loans are not affordable. When you look at expedite fees, subscriptions, and other kinds of fees, we're talking about low-income, low-wage workers who are often paying 90 to 300% APR, if you calculate that out. We also did a survey last year of our clients, our older adults, our tenants who come to us. And of the almost 500 people surveyed, 90% of them were paying expedite fees, and almost 40% of them were taking out these loans at least once a month. So we support the bill. We also really encourage you to include the amendments addressing stacking and an all-in-one fee cap, because we think that will help allow these products to operate in Maryland, but with important safeguards for vulnerable workers. So with that, we urge a favorable report on HB 237 and urge the adoption of the proposed amendments.
Thank you very much. Before I move to the members, I have a quick question. Mr. Howie from the AG's office, I want to make sure I understood. So you were talking about stacking, and apparently how it's, I would assume you're saying predatory, right? Because employees are taking the same amount of money from several vendors. I just want to make sure I understood. So you're saying that EWA vendors have the technology, when you say the technology, to detect when like if it's myself taking money from these EWAs, that you can determine the path that I am going to different vendors? I just want to make sure I understood what you said.
Well, I don't know that I can speak to what the EWA providers have right now. My
Okay.
point was that they have the ability to access the technology that can be used for this. as
Okay, I'll
we've
probably
seen-
save that question
As
then
we've seen,
for-
yes.
Okay, I'll save that question. Delegate Adams.
Thank you, Chair. So, I mean, it feels a little bit like a second bite at the apple on this subject. And, you know, we've had this for a handful of years, and it normally comes down to category of we're trying to regulate because we think the interest rates are way too high, and we counter by saying that the interest rates don't apply the way, say, a 30-year mortgage has an interest rate, that these rates would look higher, but frankly, the term and how long they're borrowing the money takes that percentage and distorts it for the purpose of trying to evaluate whether the rate is a good one or a bad one. So, I mean, we're back here, so that's my first point, is this feels like we're back at it before we've even put in place the bill from last year, if I understand my colleague's position with the last panel. But my only question is that under last year's bill, if I have it right, on basically page 1 of the bill, is it currently the lender has to disclose to the consumer to whom the tip will be allocated and sets the default tip at 0. So if the default tip is set at 0, and then a consumer elects to change the percentage from 0 to something else, is the consumer not making a thoughtful decision and deciding for themselves whether or not they choose or choose not to make that financial decision, I'll call it?
Who are you directing that question to, Delegate Adams?
Marceline White.
I think that's a great question. I know Ms. McKinney talked about, and I believe has screenshots on a certain app where you have to go through 17 times before you can finish the transaction, where you're asked for a tip multiple times. So I think choice is an important word, but I think it has to be informed
Ms.
choice.
White, I'm sorry, can I interject? Apparently, we are not live, so we want to make sure we're on the record. Could you just appreciate your indulgence?
Yep.
Uh-oh.
You gotta do it again.
So it's a free-for-all. Let's go for it.
Dance party.
All right.
Diane's got some music over there.
Two percentage to music.
Yeah. Okay, so I got permission that while we're not live, we do have folks here in person, so we can continue. Appreciate, yeah, we're still public. Did we cut off when Delegate Adams was? Just for the, go ahead and ask your question again.
Yeah, so second bite at the apple, and the bill has the default tip set at 0, and isn't the consumer making a decision of their own volition?
Thank you so much for the question, Delegate.
You got to press your button now.
Do not. Okay. Thank you so much for the question, Delegate. As I want to note that one of the companies uses tips of some of the many providers here, but I want to note that Ms. McKinney has screenshots where, because of dark patterns, you may set it to 0, but you're asked 17 more times if you want to tip before you can finish the transaction. So as she said, some of the clients are confused when they keep getting asked again and again if this is required, if the tip is actually required to finish the transaction. So I'd simply say that there's confusion and we want clarity in all of our contracts and all of our documentation.
Okay, so I would just ask a further question, and Mr. Howie or Marceline, if you want to answer. If we haven't set up the regulatory framework yet, if we just are now issuing licenses and of it, but we still are putting this in place, that's my point of my original comment, is that we've not even started regulating this. And I'm just mildly curious, is now the right time to be bringing this next bill just from a policy standpoint, but also just from a process? I mean, our committee, our legislature passed this bill last year with some balance to saying yes, but here are the limits, but here we are again. So I guess I'm asking just a value question on why we're here if we haven't put it in place yet.
I would say that, you know, for the last 3 years, we collectively and other advocates have been here saying these same issues, like none of the issues that we are bringing up are new, and they weren't considered in the testimony. I know that the committees, you know, here worked on them, but again, not everything was answered for us to have the guardrails. You know, while there was some work done, I think, you know, in this bill, if we think, setting aside the amendments for a second, just what the bill does, like, it's really important that they're not discriminatory. That was a miss, right, from last year, whether it was a drafting error or otherwise. So we need to make sure that these are anti-discrimination. And then, you know, from our standpoint, you know, the tips are a really egregious part of it. There's only one vendor that is offering the tips, so it's not something that is wholesale across the entire industry. It's only one vendor that does that. And from what we heard when we were in the Senate last week is that they're not even offering them in Maryland right now. You know, which is a question for us of that company of like, then why are you fighting the tips? So that's why I would say we are back here again this year.
Thank you.
Thank you. Delegate Howard, and then Delegate Amprey.
Chair, so what are some alternatives, better alternatives to earned wage access then? So can you outline some of those for the committee?
Me?
Sure, anybody.
Okay, sure.
Good to see you again.
Good to see you too. Thank you. Glad to be back. So one, you know, these amendments are not about getting rid of earned wage access. You know, the bill that passed last year does create a framework. The licensing is happening. It's again saying, what are the guardrails? There's a lot of different models that fall under earned wage access. This isn't just, and we saw this again for those of you who have been around for some of the payday lending conversations we had before. There used to be storefronts, and then there were installment loans, and that, you know, like there were different sort of ways. And so for each model you have to tweak a little bit. So I think for us, there's the anti-discrimination language absolutely has to be there, right? Like that's part of like every loan. And then the tips is really an outlier in the industry. It is one group. So again, from us, if you're trying to regulate to the whole, then why are we allowing so much for one company to make so much of their revenue off of this one piece that we have seen as incredibly deceptive and confusing for consumers?
Okay, thank you.
Delegate Amprey. Buffering?
There we go. All right. Thank you, Madam Chair. First of all, I want to say thank you all for coming and testifying. Thank you all for thinking about how we can make sure we can make this bill better in the sense of consumer protection, because I do want to make sure that, again, as we innovate, I don't think that innovation and consumer protection have to be opposites, right? They can go together, and hoping that we can find common ground and we can make that happen. But I do want to be careful. Again, I want to be careful that as we innovate, you know, we don't scare away companies and institutions from wanting to come and put their flagpole in Maryland, because we really do need as much business coming here, and we also need access to capital for people who need it. I guess my first question is going to be for Attorney General's office. Just want to get a better understanding of I understand how stacking works. And I guess my concern is that by putting in heavy anti-stacking provisions, do you have any fear or concern that it would impose a way in which those who don't look to stack could possibly harm how much money they can borrow, et cetera? Just making sure that we're thinking through how making sure stacking is not going to, being anti-stacking, we're not also anti getting access to money.
I don't think so. You know, as Deputy Howie mentioned, Connecticut has already adopted a law, an anti-stacking law that is very similar to what we proposed. Sorry?
I can hear the last thing you said.
Oh, that the state of Connecticut has also adopted a anti-stacking law that is similar to what we have proposed, which I think indicates that it is workable.
Yeah, I'm having worked with the industry, my understanding is that Connecticut's system isn't all the way up and running yet, that they don't have licenses out yet. So I know they've done it, but it's not in working. We still be doing it alone, essentially, right? Is that a fair assumption? That they haven't.
I know that they passed the bill last year. I don't know where they are in the implementation of it, but, you know.
So we'd be working with, us and Connecticut working together to figure this out, right? I guess we'd be figuring it out together. My other question is just on the fee cap. So I understand last year's bill that we had caps on certain transaction amounts, right? I think it was $5. $5 is the cap for anything $75 or less, and then I think it was $750 for $750 or less or more. Couldn't go beyond $750. So I'm trying to understand the caps that you all want to introduce would be different in what way?
I think the main thing to consider is that currently, with each transaction that a consumer would have with one of these EWA products, it's a separate transaction with a separate fee. If we look creatively with innovation and think of how we can combine those in a way that makes sense into not it's multiple transactions, but you have one fee that covers over a time period. So you're not coming, if you have consumers that come in, every 2 weeks for this product, they really have to look hard to trying to assess why are they paying the same fees for that product, and that's how the dollars really get large.
Got it. And I guess the last question I have is, I guess anyone can take this question, but I guess maybe Ms. McKinney, you can answer this question. I was trying to think through. Again, I think EWA, again, it's a great product in the sense that I want to steer people away from relying on credit cards. We know credit cards, when you're relying on credit cards to make ends meet, you're taking on interest rates, but what's could often be even worse is that you're damaging your credit, so that when you want to have more stability later in your life, you're actually harming yourself in your current situation. So I just want to get a better idea of how can we make sure that as we regulate this well, that we're also just not steering more people to go back to the world of credit cards and payday loans. Like, I want to make, you understand where I'm coming from? Like, how do we balance that? Maybe that's a question we can talk about offline, but if you can just give me like your general theory of how we balance that, because I know you are in this work.
Yes.
I want to make sure that my constituents, have access, to having a healthy financial life later, and that these moments where they need a little bit of money don't harm them for forever, essentially.
Well, first of all, I think the problem we're all trying to solve for here is insufficient income or insufficient matching between when income comes and expenses happen, right? Like, that is the volatility that families are facing. And access to capital can be helpful, but access to capital at what cost, and making it affordable, I think, is really important. Again, for the clients that we're seeing, we're talking about people who are sometimes taking 3-4 loans out in the same pay period, sometimes in the same week. So it's not just like every 2 weeks or the week in between or things like that. They're using it a bit more habitually. And I think, one thing that we can look to is a lot of states have done a lot of work around payday lending, which is in this, yes, this is a better option than a payday loan, but, there are like 13 states that have required something like this, data clearinghouse that can prevent the stacking. So even though Connecticut may not be up yet, we can look to what other industries around small dollar short-term loans have done to be able to say, okay, well, how did they do it? How did they fit this out? I think at the end of the day, what is important for all of us is that people don't have to pay too much to get access to their paycheck, which is in our Maryland Constitution, and that's what we would like to see.
Got it. Look, appreciate you all. Look forward to working with you all and figuring out a way we can make sure Maryland's the best place where EWA can function.
Thank you, Delegate Amprey. There are no further questions for this panel. Thank you very much. We'll now move on to the unfavorables. Roger Mano, Tara Ryder, Max Raymond, Sarah Mamula, and Frank Boston. please begin. Anybody?
Chair Valderrama and members of the committee, thank you for the opportunity to testify today. My name is Max Raymond, and I represent the Chamber of Progress, a tech industry association advocating for policies that ensure everyone benefits from technological advancements. And I respectfully urge you to oppose HB 237. Less than a year ago, Maryland enacted one of the strongest earned wage access frameworks in the country, and the law provides robust consumer protections, including strict fee caps, a required no-cost option, no late fees, no credit checks or reporting, and non-recourse transactions. HB 237 would undo key parts of that framework without adding in any meaningful protection. The bill bans voluntary tips, but Maryland law already ensures that tips are truly voluntary. The tips must be set to zero, disclosures are clear and repeated, and tipping can never affect access to service, and also the tips are refundable. Consumers are not pressured, misled, or coerced. A full ban removes consumer choice to solve a problem that existing law already addresses. Leaving workers with fewer options at a time when we're facing an affordability crisis across the country is not something that we can afford. Research consistently shows that earned wage access is used for essentials like rent, groceries, utilities, all of which have seen prices skyrocket due to inflation and tariffs. Marylanders have paid an average of $1,326 more in household expenses since President Trump took office. Users understand EWA products, prefer them to risky alternatives such as payday lending, and report meaningful improvements in their financial stability. For these reasons, we urge you to oppose HB 237 and preserve Maryland's balanced and effective earned wage access framework. Thank you for your time.
I'll go next, Madam Chair, if you want. Madam Chair, members of the committee, I'm Frank Boston III. I'm here on behalf of Aaron and my client Ben LaRocco couldn't make it today. He's on the West Coast. We certainly oppose this bill. I'll just be straight with you. A lot of work, this committee spent a lot of work getting this bill ready to pass it, and it hasn't even been law for, what, 6 months? You know, you spent a lot of time contemplating the tip, and you came out with a law that said the tip default is set at 0. So when you go to, when it pops up, it's already set at 0. You know, let's see how the new law works before we make sweeping changes. There hasn't been an army of people here testifying about this bill, about the tips. In fact, not one customer is here today or in the Senate saying, hey, we don't like this tip option. Not one person's testifying in favor of this bill who actually uses it. And everywhere you go, there's a tip option. Look at the spectrum. You go across to the canteen in the Senate. You pay with your credit card, they spin the machine around. I did it today. You have an option to leave a tip. When you make a political contribution online, there's an option from that company to leave a tip. Same thing. There's no human person at the receiving. There's no way to receiving that tip at the end, but you can still leave a tip. And let's talk about the tip. The average tip is $1, you know, or maybe $2. And usually when there's a tip given, that's because there's no fee or a very small fee that was being charged. We ask for an unfavorable. Thank you.
Madam Chair and members of the committee, my name is Tara Ryder, and I am the Vice President of Policy and Government Relations at Bridget, a financial wellness company that offers direct-to-consumer earned wage access to over 130,000 consumers in Maryland at an average of $75 per transaction. As you know, earned wage access is a financial tool that so many Maryland residents rely on. I'm here to discuss the proposed amendments to newly enacted Chapter 847. While the amendments have a focus on tips, Bridget's concerns are around the other provisions that would improperly apply loan statutes to the product rather than establish those provisions within the existing chapter. Bridget does not solicit tips, so I am unable to speak to those amendments. Over the last 2+ years, myself and industry colleagues have had robust and open conversations with the legislature,
the Office of Financial Regulation, consumer advocates, and most importantly, our customers, to develop a framework for providers to operate under. As a result, Chapter 847 was created and went into effect just a few short months ago. Chapter 847 establishes consumer protections, a licensing requirement for providers, as well as a first-in-the-nation fee cap. Bridget charges an optional $2.99 expedited delivery fee with an optional subscription for a suite of financial wellness services that are not incident to the EWA transaction. I personally am so proud of the work that was done over the last 2 years to protect Maryland consumers. We appreciate the time and efforts that both the Senate Finance Committee and House Economic Matters Committee have spent working with stakeholders on this important issue. Amending the bill further may potentially create more confusion as part of the licensing process and put new requirements on providers who are still waiting licensure under the current framework. I ask that providers are given a fair opportunity to gain their licensure first before any amendments are made that may limit operations. Should any issues arise, we continue an open dialogue with all interested parties to determine the best path forward, as we have done for the last 2 years. Thank you again for your efforts on creating a responsible framework.
Thank you, Madam Chair. Members of the committee, Roger Meno on behalf of Pay Active. I would like to say sincerely thank you to the Economic Matters Committee for the work that you've done over the last 3 years to begin to regulate this industry. I'd also like to thank sincerely Secretary Wu, Commissioner Salazar, and their team for working with us to try to get this thing regulated. Pay Active was the first company to approach the administration to regulate this industry some 3 years ago. Pay Active is an employer-integrated earned wage access provider. They are a public benefit corporation, B Corp as well. They've been doing business and servicing employers in the state for about 10 years now. They don't solicit tips or customers. Their product is non-recourse. They don't run credit checks, and there's 5 free options for those employees of those companies that are the customers of Pay Active. We'd very respectfully ask for an unfavorable report on this bill. As was mentioned previously, the licensing process has only just begun. It began on October 1st of last year. There are a great many providers that are not licensed or are in the process of being licensed. In the alternative, we would appreciate the opportunity to work with the administration and this committee on an amendment that provides further clarity. Thank you so much.
Chair Valderrama and members of the committee, thank you for the opportunity to testify before you today. I represent the Financial Technology Association, an organization representing fintech companies, including several leading providers of earned wage access. FTA champions the power of technology-centered financial services and advocates for the modernization of regulation to support competition, inclusion, and innovation. With successful passage of EWA legislation last year, which only went into effect in October of 2025, FTA opposes House Bill 237. In a time of affordability challenges, EWA provides the abilities for workers to tap into their already earned wages between pay cycles. It helps people pay their bills on time, manage their cash flow, and handle emergency expenses such as a doctor's visit or car repair. EWA is safe and transparent, making the product unique to other options in the market. There are no mandatory fees, no credit checks, no interest, and no impact on credit scores. EWA providers always offer a no-cost option, and workers can access only a portion of their paychecks before payday. They are non-recourse and simply let people access the wages they have already earned. These protections apply whether the model is business to business and offered as an employee benefit or direct to consumer, which allows any worker to choose the provider that best fits their needs. As mentioned last year, Maryland successfully passed EWA legislation to provide important risk-based regulatory clarity for an innovative product that many Marylanders rely on. Legislation which reflected 2 years of collaborative work by this very committee. With such recent passage of legislation that ensures strong consumer disclosures and codifies the existing consumer protections of EWA providers, we urge the committee to oppose House Bill 237. We thank the committee for championing innovation in financial services and working to provide the people of Maryland with quick and convenient access to their already earned wages. Thank you.
If I may, for the record, you're Sarah Mamula?
Sarah Manula, yes.
Okay.
I started us off, ma'am.
Okay, thank you. Delegate Bandari.
Thank you, Madam Chair. Tips, if I heard correctly, you said that tips are voluntary, yes or no?
Yes.
What percentage of your total revenue is derived from tips? And if consumer can freely decline them, why does your business model depend on tips as a significant source of revenue?
Are you asking me specific to my company?
I mean,
or
any
to the
company,
industry?
Like Pay Active or industry, yes.
I'm sorry, did you say Pay Active?
Yeah, I mean, any company, like any.
Pay Active does not solicit tips.
Like any company in the industry, do they?
Yeah, go ahead.
I was going to say, there are companies within FTA membership that do offer tips, though I can't speak for specific companies on their revenue.
Okay.
So I represent Earnin. We do solicit tips. For the record, though, right now, we are not soliciting tips in the state of Maryland. And that's for a certain business decision. But, we still like to preserve the right. But it is a part of our business model. And I can't tell you, I'm not from the company, I can get you that number. I can't tell you what percentage of revenue is derived from tips, but I will seek to get that for you.
The second question about anti-discrimination. When I heard the secretarial panel, do you support the bill's anti-discriminatory provision? I was reading the bill, yes or no? Do you support the bill's anti-discrimination provision as mentioned in the bill? And if you do or don't, I don't know. And can you explain how your requirement to treat all consumers equally would negatively affect the business model?
Well, of course, we support anti-discrimination. Nobody wants to discriminate. The bill we passed last year, and I stand corrected, it went into effect in October, so it hasn't even been law for 3 months. We took many measures and many steps to make sure it was not discriminatory. These companies, my company, we're not discriminatory.
Okay, last question regarding the loan stacking. I heard a lot of debate on that. What specific safeguard do your industry currently have in place to prevent borrowers from taking out multiple advances against the same wages? And are you in favor of that statutory anti-stacking protection, yes or no?
I can take that question.
Sure.
As far as anti-stacking goes, I think there is some confusion as to how the product works. There's a lot of discussion about the payday loan market and that consumers were able to take their entire paycheck or a large portion of their paycheck for multiple providers. Earned wage access does not allow access to an entire paycheck. You can only have access to what you've earned to date. So most consumers are taking out small dollars. Bridget, the average transaction is $75. So you're really not looking at providers giving $500 on the same wages to each individual customer. So I think, there's no evidence that we have seen, that we've heard from our customers that there's an issue with stacking. In our terms of service, they already agree that they will not take out a transaction on the same wages that they've already, from one company to another. And I just generally, while we don't want anyone to be in a situation where they're overextended, the product is also non-recourse. So a payday loan is going to send you to collections, report to the credit bureau, and require payment. Whereas with earned wage access, you can change your payment date, you can cancel your transaction. There's a lot of flexibility in the repayment mechanism. So it's significantly different than a payday loan where that would be a concern.
Last question, Madam Chair. I'm new to the committee. I'm sorry for my ignorance. If we do not pass this bill, do you think in future now it creates a regulatory gap? Don't we think that there should be clear, uniform consumer protection standard governing these products, it works like the credit? And if it does, the industry operates outside the traditional lending laws. Don't you think that we should do something about it?
So the law that was just recently enacted does do all of that. These are just amendments that, and I can only speak to one portion of it, where we would prefer that those provisions are enumerated within the current chapter rather than pointing to other chapters within law. That way, the regulatory clarity for providers is very clear. So while the anti-discrimination, we have absolutely no issue with enumerating that, we would just prefer that it would be enumerated within the chapter.
I yield, Madam Chair.
Definitely not an ignorant question, Delegate Bhandari. Delegate Pruski?
Thank you, Madam Chair, and thank you to the panel. I do recall this last year, and I still have my notes. And I know states and certain municipalities are certainly changing. Apparently, there was some testimony in the Senate, though, and I'm curious, and it wasn't really brought up here, but when we look at your business model, and anyone could answer this question, if you do not allow tips in certain states, do you have higher fees? And then if you do allow tips, you have lower fees? Is that something that anybody uses as part of the record that you're aware of with your companies?
PayActive has 5 free mechanisms for users to withdraw their own earned wages, and there's one expedited fee. That fee, I think, is one of the lowest, as I understand it, in the industry. I think it's, I don't want to quote the number, but it's quite low.
Understood.
And they don't engage in any solicitation of tips, as I mentioned.
Okay, anyone else?
Bridget does not solicit tips.
Okay. Again, you probably hear the theme here, tips and fees kind of being the same thing, so that's a concern, obviously, addressing. But I'm also curious, we heard earlier testimony about 17 times asking for, the tip. Again, I forgot, that was brought up earlier. I can't confirm that, don't see it. But if that is the case, is there anything that your companies are willing to do or give a suggestion to this committee to resolve that? Because that does seem a little high from a consumer. So I'm just curious if anybody has any suggestions to actually address that issue.
I'm not sure I understand the question.
So it was alluded to earlier that the tip kept on coming up through different prompts and screens. So say, for instance, I go on, I get the loan, I say, no, I don't want a tip, and then it says, what's your address? Give me the loan. Do I order DoorDash? Give me the loan. I know I'm going. But you understand what I'm saying. It just, whatever it is, you keep going. But I guess what I'm asking is there a way to solve that? I don't know what company, I can certainly follow up, but I'm just curious if you have suggestions to address that.
Well, I'm not aware of that going on. I understand the coercion that I guess was implied by it, but I can't speak to that because I'm not aware of our company doing that.
Sure.
And I can't speak for other companies.
Okay. If any of you have that, I'd like to follow up on that because certainly that was testimony. And I find that quite concerning, though, obviously, if it is something that is brought up several times. I mean, there's one discussion about asking for a tip. There's another thing asking for it multiple times. Thank you.
You satisfied, Delegate Pruski? I didn't mean it like that, but you're good? Delegate Ampry.
Thank you, Madam Chair, and thank you all for coming, and thank you all for your commitment to bringing your services to Maryland. Again, I will say again, I love seeing more companies and institutions coming to Maryland, especially in the fintech space. Again, you all come unfavorable. Is there any amendments you would want to offer? Is there anything we could? Are there any amendments that we would make you that would satisfy you with the current bill as provided, other than just the complete unfavorable? It's open. Very open-ended question. Before.
I'm happy to talk about where the exemptions are pointing to Chapter 12. We're happy to enumerate those in the current chapter. We support that as an industry. I can wholeheartedly say Bridget does not participate in any unfair, deceptive practices. We are wholeheartedly committed to making sure individuals are not discriminated against when they use our products. So happy to discuss that further, and just really making the focus that the licenses are able to be granted to the companies that are applying and that are pending, and really just trying to make sure that, we can get licensed under the current statute without, this potentially resetting the clock if, the law changes, the application may change. So that is really our concern.
I guess you're right. Well, other question I have, just on the tip, I know that you all kind of asked a similar question as far as like the tip model. It's only here, based on the testimony earlier, it's only one company that's really using the tip model. I guess my question is, if it's part of your, like, where does that money go? Like, where does the tip money go? Like, when someone gives a $1 tip, is that trying to supplement the fact that that person possibly was able to repay the loan, didn't use any of the fee structure, and they want to say thank you? Like, what is that tip? What is the tip? What does it go towards? Like, what does it go for towards in your profit model?
I believe it offsets costs, and I'm not, let me qualify this. Ben LaRocco's the expert, and you know Ben, and he would be here. He testified last week, but he can't be here today. But as you recall from the product, you don't have to pay anything. If you take the money in a certain way and don't get it expedited, there is no fee at all. So the tip goes to offset some of the costs.
Got it. And then last question.
Otherwise, there's no money made on it.
Right. And last question, I guess anyone can answer this. Just learning more about stacking, I would say that stacking is problematic in the sense that it could put someone in a really financial bind. But more importantly, I feel as though stacking also possibly could hurt you all in the sense that you're not getting the money that you hope you will receive if someone's taking out 5 loans on it. So just want to get your thoughts, like, is the practice of stacking, do you agree that there should be something to help? Does it not benefit you all in any kind of way to have a limitation on stacking?
So currently, we're not aware that there are issues with consumers taking out more than one transaction in their pay period. As far as Bridget is concerned, if a customer needs additional time, we're happy to grant that to them. The purpose of this is to lift customers up, not make them worse off than they were when they came to the company. We are more so about education and educating the consumer so that they understand the risks where if they do overextend themselves, what that could potentially do to their financial situation, and also just making sure that they are aware of what options for payment they have to them should they be in a situation where they can't make that payment.
Okay.
Well, you raised an interesting question, Delegate Ampry, and the proponents raised an interesting issue. So, we look forward to having further conversations on that. Because you're right, we don't want to lose money either. But as Tara said, there's safeguards in place. But it is an interesting issue. We definitely entertain further conversations with the department in that regard.
And the best thing about all this is only February 3rd. So we have all this time to get this worked out between all of us and be a happy place. So look forward to working with everybody and figuring out how we can get to a good spot. We have plenty of time in theory. What, 70 days left? Something like that? I'm not counting.
Thank you very much. There are no more questions for this panel. Thank you kindly.
Thank you.
We have 2 more panelists, one in person, one virtual for unfavorable, and that's Amy Boss. And then virtually, we have Judith Rosenberg.
Good afternoon, members of the committee. My name is Amy Boss. I'm the Vice President of Government Affairs at NetChoice. We're a trade association dedicated to free expression and free enterprise online. Respectfully, we oppose HB 237, as previous witnesses have already testified. We do not think this bill is needed. It is extremely premature given last year's law and the fact that licenses are only just now being issued. But I did want to raise just some constitutional vulnerabilities that these amendments could have, particularly as it applies to a proposed ban on tips. In doing so, this bill would go beyond stopping bad behavior, instead ban an entire voluntary practice outright. Courts have made clear that when government regulates the economy, it must still act reasonably and narrowly. A blanket prohibition rather than targeting abuse is exactly the kind of overreach that courts often strike down. The bill could also raise First Amendment concerns. Under Central Hudson, the 1980 Supreme Court case, the state must show that its speech restriction directly advances a substantial interest using the least restrictive means available. It's tough to see how Maryland would meet this burden when less restrictive alternatives exist, like disclosure requirements and anti-coercion provisions, which already exist and address some of these same concerns. Well-intended consumer protection laws that overreach are being struck down, and we would encourage this committee to pursue a narrow, constitutionally durable protection rather than pursue HB 237. Urge you to respectfully oppose this legislation. Thank you.
Thank you, Ms. Rosenberg.
Thank you, Chair Valderrama and members of the House Economic Matters Committee. My name is Hoodie Rosenberg, and I serve as the Deputy Director of State Government Affairs for the American FinTech Council, AFC. Thank you for providing me with the opportunity to testify in opposition to House Bill 237 today. AFC is the premier trade association representing the largest financial technology companies, including the largest number of earned wage access EWA providers. Our mission is to promote responsible innovation in financial services and encourage sound public policy. Last October, House Bill 1294, the EWA law, took effect, creating the first and only formal regulatory framework for EWA in the state of Maryland. Through collaboration between Maryland legislators, OFR leaders, industry, and consumer advocates, the EWA law ensured responsible EWA providers could operate, OFR maintained prudent oversight, and workers received proper protections. To date, OFR continues to process EWA's providers' license applications. However, only 4 AFC members of the 20 EWA providers our association represents have received their licenses. Thus, it is clear that it has yet to be executed fully by OFR. With this context, we express our opposition in advancing HB 237, re-engaging on the EWA issue when the existing regulatory framework has not been fully implemented seems incongruent with the legislative intent and efforts of the committee to pass the EWA law. The existing EWA law was constructed to provide adequate methods to determine if any amendments would be necessary. To pursue legislation that would reopen the provisions of the EWA law does not give adequate respect to the thoughtful policy mechanisms put in place just months prior to the introduction of HB 237. We therefore ask that the committee reject HB 237 and instead work with OFR to ensure they fulfill their existing statutory obligations in administering the legislature's intent within the EWA law. Thank you again for the opportunity to raise our concerns and oppose this bill.
Thank you, Ms. Rosenberg. Seeing no questions for you or for Ms. Boss, that concludes the bill hearings on House Bill 237. What? Oh, thank you, Delegate Humphrey. With that said, bill hearings are adjourned, but I have 2 notes for the members. 1, I need to meet with the subcommittee chairs immediately following this bill hearing. And 2, all members, you are encouraged. We have a reception this evening at 6:30 with, I say, Lego and ENT. So if your schedule permits, 6:30, and you can check with Ms. Joy for the venue. Subcommittee chairs, we will be meeting in the conference room.